All right, so we're here with David Avram at Sandstorm. David, we've spoken with Ian and of course Nolan prior, and I think with Irfan as well that has been associated with Sandstorm and work with Horizon now. And I think it would be very excellent for all of our investors to hear from you who you are before we get into all of the goodies here.
Yeah, very good. Well, thank you very much, Gorm, for having me on the show today. My name, of course, is David Awram. I've been with Sandstorm right from the beginning. In fact, I'm one of the co-founders alongside with Nolan Watson. I'm a geologist by background. So I spent the early part of my career really just doing prospecting, early stage exploration on projects in northern BC, in the rest of northern Canada. I spent some time in Mexico and in parts of Asia as well too, doing some early stage exploration, and of course in the U.S. I've been in this business since 1995. I met Nolan when I was hired as the second full-time employee at Silver Wheaton, which is today now Wheaton Precious Metal. So my background is mostly technical in nature. I've been really kind of handling that part of the business since the beginning of Sandstorm. I'm involved heavily on the technical side and the due diligence side, and really kind of strengthening that side of the business. I've been to dozens of mines around the world. I've been to really and been had a chance to evaluate hundreds of development and exploration projects on behalf of Sandstorm. So I've really seen projects of all kind of sizes and types in the company, and had a good handle. I've probably seen more mines than most people will see. The vast majority of people in the industry will see over their courses of their career, and seen what works and what doesn't. And it's really kind of my job at Sandstorm to really bridge this idea of the technical side over to the financial side. As you know, Gorm, we see ourselves more of a finance company than we do of ourselves as a mining company. Of course, the assets that we're really relying on are those mining assets. So we need to have a good grip and a good handle of how they're going to work over time, and really imagine how these projects are going to operate, not just under the existing management team, but over future management teams. Because in the end, this is very much a generational industry, and a generation you're looking to invest for generations at a time, to see what kind of payout you can have as these projects progress over a very, very long time period.
And I think at some point we're going to have another conversation and just chat about the details of the methodology of you reviewing early stage prospecting investments and so on. But today we'll just do an update, and we'll do that at some point for sure. I'm sure of that. So first of all, we spoke with Ian about half a year ago, so end of last year. What's the financial position at currently, and what has the kind of the capital allocation been like since then?
Yeah, so Sandstorm is in a good spot. We again had a quarter with many record cash flows and revenue types of items. So in the end, when you take a look at what Sandstorm's been looking at in Q2, we've been focused primarily on reducing that debt from the original from the transactions in 2022. So we have. We have really a lot of we've reduced our debt down to about $380 million as of the end of the quarter. We are seeing ounces for the period that we had, where we saw over 20,000 ounces of production. We saw over $32 million in cash flow from operations. We've seen, that's with a margin is higher than we've ever had before. We saw on a per ounce basis over almost $1,800 per ounce, compared to, and so that's effectively a record for us as well too. But in terms of that cash and the cash flow that we've had, primary thing has been really just paying down the debt, which is something that this higher commodity prices have been really effective at helping us do over the last year, and even especially the first couple months of this year, as we've seen these much higher commodity prices.
Right, and just briefly give people a sense in Q3, Q4 for the remainder of the year, and I know, I mean, most of you have some royalties, you have some streams. Many of the streams are, obviously it's upside to the gold price, but you have some flex there, so it's not pure margin expansion. So if we assume $80 or 80% EBITDA margin or something like this, what kind of revenues or cash flows would you expect to see for the remainder of the year? Would it be consistent with Q2 and just extrapolate?
Yeah, in the end, we end up having somewhere close to about anywhere between sort of $220 to about $280 in terms of a cash cost. Now, of course, that's all dependent on the blend of streams versus royalties. Streams will have ongoing payment associated with them per ounce, and then royalties will typically have a zero cost associated with it. So the revenue is effectively all kind of an EBITDA type of number. So depending on really the blend of that will determine that. But assuming somewhere around $250 per ounce is really the cash costs, so to speak. At where we are today, we're looking at today's prices. We're looking at over $2,000 on a gold equivalent ounce of a cash cost or a margin on that. So assuming a $400 increase in the gold price from there, you would see really a very direct correlation to really how much additional revenue you could get. So assuming 80,000 ounces per year for this year and perhaps into next year as well too, you can make a very quick and easy calculation as to what the assumed overall revenue and thus the EBITDA of the projects or of the company will end up being. And that ultimately is the beauty of the model, is because we don't have any of those ongoing uncertainty payments in terms of capital going back into a project. It's way easier for your average investor to take a viewpoint on where they think the price of gold's going to go, and then understand ultimately the type of operating cash flow we're going to have off of that.
We can essentially see remainder of this year, and then for entirety of next year, if you have a static production profile, gold price or somewhere around this neighborhood, that will be gone. Essentially, you will be able to pay off the majority of, or the vast majority of the debt if you wanted. But that's not
Yeah.
necessarily going to be the optimization, obviously. So let's kind of get into that. There's I loosely categorize this as three avenues of allocating capital. You can buy back your own portfolio, and you recently announced a big buyback plan, right? Um, After you sold your non-core assets, you can also invest capital in new assets, and you can do direct returns, which I classify as dividends and debt repayment as direct returns. So, how are you guys thinking around this at Sandstorm currently? Can you give me the overall picture?
Yeah, I mean, the capital allocation has been, I think, a primary way of how we think of every sort of investment that we make. That was being a technical in background. My finance education is not as thorough as many of the others, but one of the things that I learned and from Nolan, from when we worked early on, is this idea of thinking very clearly every time you allocate capital, where are you going to put that into? So historically, we've always considered ourselves a growth company. So first and foremost, we've thought about really buying new assets and more growth in the portfolio. As the company has matured and established a base of assets and a base of cash flow that we've come from, we've been able to really kind of think about different ways of this. One of the ways, of course, are the share buybacks. That's something that historically we've been much more aggressive on than your typical gold company and your typical mining company and even your typical royalty company. So we've always been opportunistic, I would say, in terms of being able to look at that and being able to take a snapshot in time of really what we think we're trading at on an NAV basis, and an NAV multiple basis has helped us guide whether or not it makes sense to buy back shares. As big shareholders ourselves, both Nolan and I think we really love the idea of share buybacks as a concept, because it really is a tax-free way of paying back your shareholders. Now, recently, we've been over the last, let's call it 18 months now, or a little bit more, we've been paying that dividend. And it's not a huge dividend. It's a dividend. We've always taken the approach on dividends, I'm sure as we've told you before, is we want to make sure that any dividend that we establish is going to be sustainable regardless of what we make the choices on different types of capital allocation. We never want to be in a position where we have to dial back that dividend. We want to make sure that we're allocating appropriate. And but we have a fairly modest dividend at this point. We're expecting that dividend to really be relatively consistent over the next little while, without really any huge expansions in it. Our main focus right now, though, for the capital and the income and the cash flow that we're receiving, is to allocate it to the debt. So that is the most aggressive thing that we're doing. And that is, in the near term future, what we want to allocate our capital to. Is paying down that debt. We started off post the transactions in 2022 and the subsequent payments, drawing upon a total of about over $635 million in debt. We've gotten that now to below $380 million. This has all been through just a revolving line of credit. And because it's a revolving line of credit, and because it has a tremendous amount of flexibility on it, it makes sense for us to allocate really as much as we possibly can on effectively a monthly and quarterly basis to pay that down, because we do have that flexibility to draw upon it for almost any payment, including our G&A. So addressing that, trying to minimize our interest expense as much as possible. That's something that we're keenly aware of and looking at. However, you are correct. In the last little bit, we've begun now looking at a share buyback program after really not buying back shares for close to about a year, because we've seen this higher increase in the commodity price, but we still see ourselves trading at below NAV, especially when you take a look at it from a spot commodity price perspective. We're really focused on starting back a share buyback program. Now, relatively modest to begin with. We're really not looking at going excessive on any given month. We're not really going to be pulling the trigger like we have in other periods, like in 2020, when there were weeks where we bought over 700,000 shares. We're not going to be at that point anytime soon, but we do want to really kind of nip away at what we see a really, really low valuation, especially relative to where the commodity prices sit today.
Right. So a healthy mix, majority of the capital will be towards paying down debt. You will have a steady stream of share buybacks, it sounds like, and if it dips a little bit, you might increase it incrementally compared to debt repayment. And then it sounds like most it will be some more modest investments for the duration of this year, at least when maybe you want to get the debt down below $250 million or towards 200 million before you really start reevaluating the balance again. Is that a fair assessment?
Yeah, listen, that revolving line of credit that we have, it's $625 million. So
Yes.
if we really did need to go out and make an acquisition right now, we would only do that in the case that we were going to get some great cash flow from that project right away. So that would be really kind of the one exception to really the capital allocation plan as it is. If something comes into our lap that's going to cash flow large amounts, that's something that we would look at in terms of investment in the actual portfolio. It would have to be something that allowed us to really kind of expand that debt capacity above where it is today. and allow us to really pay back debt at a much higher rate than we even currently are right now. That would be the exception. But other than that, with the exception of that type of, I think, rare deal, and that's right now, it's really focused on debt payback, keep the dividend the same, and then nip away at shares, not in a really aggressive manner, but really kind of begin that share buyback program over the next coming months and into the year, if that makes sense.
Okay, so let's get into the portfolio update since last we spoke
Sure.
7 months ago with Ian. So the first one is the kind of the creation of Versamet royalties between Sandbox and B2 Gold. Could you just give us the deal synopsis and what the angle from Sandstorm's point of view is, how you intend to realize this investment down the road?
Yeah. Sandbox was spun out of both ourselves and Equinox. Uh, it's still a private company. It's run by a great team, led by John Armstrong, who's really one of the most experienced M&A bankers in the space prior to really coming on as CEO of that company. Um, so in the end, we see ourselves still really just kind of as a shareholder and watching the company evolve. They've done a remarkable job of adding projects into it. So even as a private royalty company, with this latest deal with B2, which they're doing 100% really just for shares in the company, they're going to be taking they're going to see their company increase their overall revenue, which is, again, because it's a royalty company, almost all cash flow. See it increase by 2026 up to $30 million, which is really impressive considering the company is just a few years old at this point. So we're excited to see that. We'll be excited to see when that company goes public. But with this Sandbox, now Versamet is the name of it, there's really no rush for them. Now that they're seeing cash flow today from the Greenstone asset, they've got this future cash flow in the pipeline um, uh, West African resources projects in Burkina Faso. They're going to be coming on. There's some great projects that are sitting there. They can take their time in terms of going public on there. What we're excited about too is that we were able to convert a lot of those IOUs that we had in Sandbox into equity on the exercise of this program. So that allows us to potentially look at that idea of when the company does become public, is to be able to potentially liquidate that, use that for our own investments, utilize that to pay down debt. So this really gives us that opportunity to have even further flexibility and really have that visibility to liquidity on some of those investments of those non-core assets that have been propped up by really, I think, a very smart, clever acquisition strategy by that Versamet team.
And just to give people who don't know a sense, you own about, if I recall, around 20% of the company after the B2 transaction. And what do you think that would be worth approximately? Just a ballpark, people know what to kind of think of when we're speaking about this.
Yeah, listen, so we're at around 26% post this transaction. B2 becomes the largest shareholder. Equinox then is really kind of smaller than us because they didn't have this same sort of IOU to convert on it. So if you take a look at your average royalty company trading at 18 times EBITDA, assuming even just call it $25 million of EBITDA from Versamet in 2026. If it were to list this year, list that year, I think the market would attribute a value for us of really somewhere around 18 times 25, which would give you somewhere around a value of our quarter, let's call it a quarter of the company. That would give you a value of really getting close towards almost $100 million in value on this. So
Yeah.
we're pretty keen on seeing this company get public. Look at that. One of the beauties of this company too, when it goes public, is there'll be so little float out because it's primarily owned by the partners who have contributed assets into it. It likely will command a high valuation on the basis that there's effectively very, very little float in the company.
Yeah, that's very good. And you have a few examples of sort of hidden value like that within the portfolio, which is great when that kind of comes home to roost. On a less pleasant note, we had a kind of the surprise of the disaster with the tailings dam at at Göppler with SSR Mining. They've been known as a household name of high quality, good operators in Turkey, and this happened. They recently released, I think, end of May, kind of a brief update, very brief, that the technical consultants believed, had recommended or said that there were no fault on the side of the local managers and management and so on. Could you just give the implications for Hod Maden? You've guided a 1 year delay now due to this. What do you think will happen? Maybe you could talk about some of the permutations of outcomes you see for Hod Maden as an asset if SSR would have to relinquish their operations in Turkey or so.
Yeah, listen, it really is a true tragedy that happened there at Chirpler. I really do feel tremendously, and my sympathies out to the people that were affected, the victims of the accidents there. You really hate to see this happen in the industry and in Turkey, and especially with a valued partner like SSR Mining. In terms of really where it sits in regards to Hod Maden, SSR has begun their investment in that project. Of course, the Hod Maden is a much, much different project than what Chirpler was. Chirpler is really a gold-only project. Involved the heap leach pad, which is the item that failed, but also primarily the main form of operation was autoclave and cyanide leach of that subsequent materials, whereas Hod Maden is a much different project, much smaller in scale, underground only, floating a concentrate that would get shipped off. So much different in terms of no open pit, no cyanide involved, no things like heap leaches or even really large waste storage or tailings facilities that would be under threat by the same sort of issues. So quite a bit different project. Where it sits today is SSR actually only owns 10% of that Hod Maden project. Their ability to get the remaining 30% of that project, to get them up to 40% of that asset, is dependent on them paying down and getting that project forward. So as it sits, Hod Maden fully permitted in terms of an accepted EIA, permits from the Ministry of Forests, which are really kind of the two key items going forward. Through the last year plus that SSR has been involved in the project, there's been many optimizations on it. Those optimizations are requiring some alterations and modifications and permits. Turkey is now kind of back, post the Chirpler problem. Turkey is back into that idea of looking at amendments to existing EIAs and forestry permits, which are a few minor items that we're looking at. I was actually in Turkey on site meeting with both Lydia Midjilik and SSR, the team that SSR has put in place to really operate it, and was on site. This was just about 3 weeks ago or so that I was there. And it's interesting to see that a lot of that early work has continued. Of course, a lot of that design and continued optimizations works. That team is a completely separate team from Chirpler, of course, but they haven't had any issues in terms of getting additional studies done on it and continuing on with some of the early works. There is some earth moving on site. There's modifications of roads on site. They continue with really the land accumulation program, which is really in its very, very final steps. They continue on with their community programs. So at Hod Maden, it really continues on as planned in terms of the early works going into this. Of course, there are some significant items that have to be completed before we get into the heavy construction of it. And a big part of that is the project financing at that Turkey level. So that's one where there is certainly needs to be a revisited approach. SSR, with its lower financial capacity, with Chirpler closed, will make some modifications to that. So we've talked to all of the people that were looking at the original project financing. They're still interested, but there's some more information we have to go through. But in the meantime, many of those early works programs, they continue on. SSR is dedicated to continue with the project. However, as they continue investigations at Chirpler, we'll be able to understand a little bit more the ability for SSR to be able to function within Turkey as a jurisdiction. I think there'll be a good, fair, measured approach in terms of investigations on both sides to be able to see what happens. But until those are completed, we'll have to really see about SSR's ability to actually function within Turkey and continue to operate projects. In the case, again, because they're really just a 10% owner in the project today, they still are a minority owner of the project, but we still are working with them to understand how the project continues to proceed. We've changed that guidance shortly after the incident happened. So we've pushed back initial production in the project by a year. We'll continue to really monitor how that goes to understand when that production if it may be delayed. In terms of the viability of the project, certainly I don't anticipate any kind of blowback from the permitting authorities or anything on the project itself. I think the question just may be is SSR being able to execute on their part and their participation in the project.
Indeed, I think the asset is unquestionable, and everything has been done correctly. So I think someone is going to unavoidably build this project. It's just going to happen. Projects of this quality get built because they make a lot of money if they're done right by proficient people. Could I just ask you, David, because we haven't really dug too much into this previously, but since we're on Hod Maden, could you speak briefly to because it's currently it's a fairly big deposit outlined currently, but it's not huge yet. Could you speak about the geological potential you see around Hod Maden to really continue to add decades of potential mineral inventory at Hod Maden? Just speak to that briefly, would be interesting.
Yeah, that's one of the things that Lydia, as the operator of the project to date, hasn't spent a lot of time looking at beyond what that original ore body was. So right now it sits at over 9 million tons, and it sits at a grade, combined gold equivalent grade of close to 12 grams per ton. Much of that, like even if you take a look at just a million tons, the highest grade million tons, that's kind of the core of the deposit. There's almost 1 million ounces in just that core of it. It really is remarkable. I kind of like to describe it a little bit as almost a cereal box shape. It's kind of about 300 meters long. It's about 400 meters deep, and it's kind of somewhere between 40 and 80 meters wide. The grade coming off of there, when you see grades of upwards of 10 grams and above, you always make that assumption that you're mining an ore body that's really kind of maybe about 50 centimeters wide. This one is 80 meters wide in parts. And that means your ability to mine consistently and be able to consistently get that material in there is great. The other thing, too, is you don't end up really with these areas with maybe 1,000 grams per ton or so. You end up with consistent sort of 20 to 30 grams per ton gold equivalent type of sections for vast, vast intercepts. Every time we put drill holes into it, you're just amazed at the consistency of it. What we haven't looked for yet is really a couple of, I think, important offsets. We know to the north of that existing ore body, we know, and that is the highest grade portion of the ore body, we know that there's been some kind of fault offset. We don't know how big the rest of that is, but really there's been very, very little investigation to see this. We know overall that this really, this three the effectively 350-meter strike of what that main ore body is sits within over 7 kilometers of a visible alteration zone, which is wide. We know that on either side, both the hanging wall and the footwall of this deposit, there's grade of some type in there. It's not high grade, but all these things point to really an enormous, powerful system. And to me, it would be very surprising if this was the only bit. Now, assuming that you get a nice 9 million ton ore body of over 10 grams gold equivalent consistently, I don't know how likely it is to see that, but to see other ore bodies of significant size that are 5 grams, that are 3 or 4 grams, to see a lower grade potential there, absolutely these things. One of the early works programs that I'm really excited to see is this underground tunnel. The part of the plan of the existing mine is to drive a 2-kilometer tunnel to this Salachor Valley, which is to the north where a lot of the infrastructure will be. But that tunnel goes immediately under this alteration zone, this 7-kilometer alteration zone. So the ability to do some exploration from that tunnel, I think there's a tremendous amount of value that might be able to be unpacked from there. We just have to see when it happens. But I feel really positive that you'll find more material. They've been focused, the operators of the project have been focused on just getting this asset up and going, and then really looking to see how it might expand in the future. But judging from the size, the power, the intensity of mineralization that you have here, I think it would be surprising if we didn't find more economic material over and within that mineral tenure and that mining license.
So let's switch gears over to Platreef. Ivanhoe released an optimization of the development and accelerated the phased expansion, essentially. And if we just recap from the prior conversation with Ian, we know that phase one is kind of on track to get completed not too long from now, and that will be kind of 2,000 ounces to Sandstorm at 1 million ton per annum. Could you let us know what the new update for phase two entails in terms of timing and amount of gold attributable to Sandstorm once that is executed upon by Ivanhoe?
Yeah, that Platreef, really remarkable ore body, part of this Merensky Reef complex, but much, much different in the fact that the widths as which you see that Merensky Reef at that point are really dramatic, allowing for much, much more tonnage to be able to brought up and using much different methods of mining than you typically would see at a Merensky Reef type of mine. So Ivanhoe has done a remarkable job of really trying to figure out how to optimize this from their original plans. So I was actually just there earlier this year, just a few months ago as well too. So I had the ability to really go see what they're doing firsthand, take a look. And it really is a fantastic world-class project. Eventually, they're going to have 7 shafts altogether. Right now, shaft 1 has been operational. It's being used exclusively right now just for haulage of development ore from shaft 2 and shaft 3. Now, shaft 2 is, of course, a significant part of not just phase 2, but also phase 3 of that mine. This is going to be a remarkable shaft, 10 meters in diameter, going down over a kilometer in depth. It has the largest head frame, one of the largest head frames that exist in the mining world today. It will be the largest shaft in Africa, which is really remarkable considering how many of those shafts and large mining operations do exist in South Africa. It'll have haulage capacity of almost 8 million tons altogether, which certainly takes them beyond even that phase two. Now, it's still going to take some time before that shaft is ready. 2027 until that boring is going to be completed, till they actually have that 10-meter diameter done, and then really another time to really outfit it and make sure it's usable. However, one of the big differences that they've made is this shaft 3. Shaft 3 originally was contemplated only as a vent shaft. They have now made the decision, and they've almost finished boring it out, to close to 7 meters in diameter. So again, it's turned into a gigantic shaft. That boring has been completed. That head frame is being assembled. It's going to be put into and created into a haulage shaft. Once that becomes functional, then you can really speed up the development overall, not just of shaft 2, but really getting into this idea of phase 1, so, or phase 2. So, like you said, the phase 1, which is really expected to be 800,000 tons per day, so relatively modest in terms of scales of projects. That's expected to happen within H1 of Q of next year. So once shaft 3 becomes operational, they'll be able to really start speeding up both the production side of phase 1 and really speed up phase 2. So there's no official new timelines out beyond the 2029 start date for phase 2. However, later on this year, they're expecting to do another technical update from Ivanhoe once they get a handle on really some of these studies as to how well shaft 3 can be utilized between now and 2029 to see if there's some kind of bridge. I would guess, my speculation when you look at this is that there'll be effectively kind of a phase 1.5, we'll call it, where instead of really getting up to 4 million tons per day, you'll get up to something beyond 800,000 tons per day, but below that 4 million tons, 800,000 tons per annum to below the 4 million tons per annum, which is phase 2. Now the other thing about phase 3 is that they're doing something very logical, something I've seen in a number of different mines, is just really, once phase 2 is up and going, is replicating that exact same infrastructure process 2 more times over to get to phase 3, which is ultimately 10 million tons per annum. Now, there's no real timeline on that, and I think a big part of that will be revealed as we get through these additional technical studies that they complete sometime, hopefully before the end of this year. But with any luck and knowing really kind of how and the experience of working with Ivanhoe over these years, they'll really try to speed up beyond the 800,000 tons per annum as quickly as they possibly can, and really take advantage of this new infrastructure that's being built there.
So essentially, you can observe in the engineering, they're over engineering to what previously is communicated. You can see that quite clearly things are being accelerated. Nothing has been formally stated by them, but just look at what they're doing, and yes, that's going to happen. And to crystallize for people, 800,000 tons per annum gives Sandstorm 2K ounces attributable of gold in the first kind of clause of the royalty. You can go back to the last conversation to see the details of that, but for a long period of time, Sandstorm will get a lot of gold for very cheap, right? So it's going to be a tremendous, tremendous stream for you guys for a long time of revenue. And so 800,000, 2K, 4 million times 5, 10 million times 2.5 from 5. So we're talking, first 2K, then we're talking 10K geos per annum, then we're talking, 20, 30, potentially even more for a period of time there. So tremendous.
Yeah, that's the amazing thing about Ivanhoe. And Ivanhoe, and getting there on site really helps to get a handle on this. Many of the people that are working on the Platreef project, a lot of them are the very same people that worked on that amazingly successful Kakula project, everything in the DRC. So it's, I would certainly call Ivanhoe as one of the most effective implementers and developers of mega projects around the world, this isn't going to be a project that they fail on either. And they'll be able to really figure out how to get those optimizations and increase that tonnage sooner. And so we'll get a chance to understand that a little bit more once this new technical report comes out. And we're really eagerly anxious, and we'll make sure that everybody hears about it when it comes, because that'll help speed up those timelines to see that increase to closer to 10,000 ounces gold equivalent and above from that project.
And then let's head over to Antamina, a mega project, and Teck has received their approval of the modified environmental impact. It allows them to invest, $2 billion US over the coming 8 years, and potentially ramping up by 40%, to my understanding. Could you tell us, what that would entail for Sandstorm and also obviously for Horizon, as we know, in terms of revenue increase, and what's the likelihood of the ramp up actually taking place? I'm not quite sure if that was a set in stone thing or what the plan from Tech's point of view is.
Yeah, listen, I think a lot of this, Antamina, it's one of the lowest cost operated mines in Peru. Really an extraordinary, almost legendary project in the mining industry overall. And the operators at Minera Antamina has done an amazing job of figuring out how to optimize over the years. They've got teams. I've been there on site as well too, of course. They have teams that are just thinking about day-to-day optimizations and efficiency improvements they can have there. We certainly expected this MEIA to be approved. A big part of that, really what it mainly is this idea of expanding the existing tailings facility. That was something that certainly was expected. It's just really kind of a matter of time. So they are expanding the existing tailings, but they're also still planning right now and in the process of looking at new potential areas that they can store tailings, because this is still continues to be a multi-generational project. This idea of expanding capacity, absolutely, it's there, and I'm not surprised that they're looking very seriously at this. We'll see how they get to that 40%. There's not a lot of details yet, but I know from visiting that team and working with that team, if they think it's achievable, they are almost certainly they're going to put all their resources into it to make it achievable. Of course, the partners on that project being really primarily BHP and Glencore, they're very interested in reinvesting and making sure they can increase their exposure to additional copper projects. I think a big part in terms of overall production and metal production out of this is this idea of underground production from Antamina. Currently, of course, it's open pit. Now, the difference between Antamina as an underground, are both combined underground and open pit, is that without having to provide the correlation of additional, directly correlatable additional tons, you get both higher grade material from that underground portion of the skarn versus really the open pit, which is going to be a lower grade material. So some of that 40% increase in overall material, is it a 40% increase in overall tonnage going through the project? Likely not. It's probably a combination of really seeing some of this higher grade underground material, being able to combine, utilizing that existing mill with some optimizations, some expansions, some tweaks on it to really kind of see it be able to accept this higher grade material, and then additional optimizations in that open pit. This is this skarn deposit, which Antamina is based off of. Wow, it's really a one of a kind, and it really does go. We have that data. We know that it extends down to depths, and there's a lot of material to really go after. They understand that ore body now very, very well, and are just trying to figure out how do we make that combination of open pit, underground, and where does it come from. So there'll be lots more to see from there. Even But in the meantime, 2036 as a current reserve date, I think that's still very conservative. They'll continue to increase that on its own just from the additional tailing storage space. That was the main reason why they main constraint of their reserves today. So even if they just expand those tailings deposits, that will extend the mine life. But the underground is really the sweetener to that. And so it's exciting to see that project progress.
And then very briefly, what say that 40% of output is increased, essentially metal content. What would that mean for Sandstorm? What is it producing currently? Because I mean, 6 to 8 months ago, we thought this would be a constant thing for the next decade, but now it sounds like there's plans for making this more output, spit out more metal. So 40% increase means what for Sandstorm?
Yeah, listen, I think there's a pretty good correlation to it, because we're getting that that really comparative stream from really what Horizon owns, so that royalty from a silver stream perspective. So you probably, because they're really kind of talking about 40% in terms of overall output on the project, you can see a pretty close correlation to that. A lot of that, of course, will depend on really the capital going into the project, how that capital is spaced out. And of course, it has a huge impact on it from those commodity prices. The higher the commodity prices are, the higher the overall MPI will be, depending on the capital that goes into it. But we'll have a good idea, better idea as to what that knock-on will be. But certainly, it'll be a positive knock-on for what Sandstorm's receiving from Antamina.
So let's head over to another giant. Let's talk about Mara. And Glencore gave an update, and they have decided that they're pursuing further investment here, and they've earmarked 400 million US, if I read correctly, in the coming 3 years. So we know that you guys have the optionality to make a large investment there. That's dependent on probably the end of this timeline. But could you give a synopsis of this announcement and how Sandstorm is thinking about this investment that's coming up on the horizon?
Yeah, listen, we're really excited about this. It's great to have it all consolidated, all under Glencore at this point now. They're very motivated to get this project, not just because it's basically the lowest capital intensity project in terms of copper production that almost exists in the world in terms of undeveloped projects, but it also allows them to avoid closure costs in the scale of hundreds of millions of dollars of Alumbrera. There certainly is that pressure from the Argentinian government is to utilize that infrastructure, that permitted infrastructure at Alumbrera, or close it down. So Glencore really is very motivated to make sure that they get this. They keep a strong timeline on production from Agua Rica into this Mara project. So it really is something that I think they're very heavily motivated. And yes, you did hear correctly. They're talking about a $400 million investment into Argentina. Now that's over a couple of other projects, but the main project by far for them is Mara. Again, same as Platreef on that story, we're expecting some kind of update, hopefully, before the end of this year. In the meantime, every time Glencore does a quarterly update or quarterly call, they always mention the Mara project, both for that idea of speeding it up to production. They see it as their most important copper development project in the pipeline, and they're absolutely right. We're really keen on seeing this project going forward. As you know, we have a $225 million option to receive 20% of that gold at a 30% ongoing purchase price. And the ramifications for us are enormous for this. If you were to take a look, again, going back to that discussion on trying to target our value in Versamet, if you assume close to $30 to $35 million in cash flow per year from that project, assuming your average royalty company 18 times EBITDA multiple on that project, the value of that stream is somewhere over $600 million, which means our $225 million purchase price is somewhere around $400 million in the money today. And on a per share basis, that's around $1.3 US per share in terms of value accretion in the money value that sits there. So, in terms of if we didn't do anything else, if we didn't do anything except for uh, pay back our debt over the next 2 or 3 years, and then made these sequence of payments to earn this option on, that would be really the most accretive transaction that you're going to see in the mining or in the royalty space. I can tell you right now, over the next 5 or 6 years.
Yeah, and the idea here is most likely this kind of budget that they're speaking of hopefully will get Mara to a stage where it's time to make that decision. Right, that's the create the feasibility study, do all of the early works and so on to get to a financing decision. So it looks like very positive for Sands. Another huge deal, right? And you're gonna know even more later this year. So that's excellent. Let's speak about Greenstone. Also, they recently consolidated their asset. That's a massive green flag, obviously, for you guys. They are hungry for this asset. I mainly just want to speak to you, and they paid 1 billion to acquire Ryan's 40% stake. So values the asset at 2.5 billion. So let's just speak about that. What does this mean in your view? They're kind of verifying the asset even more. They're doubling down. What does this mean long term for the asset? Obviously, they have something in mind. I would expect, right?
Yeah, listen, I've known the Greenstone team and the Equinox team very, very well. So I've known about their interest in consolidating the project for some time. So they really did, they needed to stretch themselves to make sure they got this, but they were so keen. I mean, they knew how important it was to get this project. We're really keen on it. We love the project, obviously. It was a big cornerstone of the Nomad transaction that we did. So we are keen on following their plans. So we have that ability at Greenstone itself. It has that ability to, just on the basis of additional stripping and new gold prices, be able to potentially expand that open pit. What I think the Equinox team is very, very keen on is this idea of the underground. So those studies, I think, now will get accelerated, and they'll start talking a little bit more meaningful and with a little bit more measure as to what that potential underground deposits. If you've ever seen really kind of a long section of Greenstone, you can see exactly how that ore body continues on into the earth. There is that ability again to be able to think about expanding that open pit in a higher gold price environment. But there's also the idea of an underground mine in the future. So having it all 100% consolidated under Equinox gives them a little bit more flexibility to be able to look at that. Of course, right now, their priority is just to ramp up the project into commercial production. And of course, that's a big effort. And it takes a lot of coordination to make sure it gets there. They managed to really build this effectively on budget. They stayed on time for the project as well too. They have a tremendous amount of ore stockpiled right now as they got that mill commissioned. The mill is pouring gold as of really just a week and a half ago. So we'll start receiving our first payments either this quarter in very minor amounts, but certainly in a much more larger scale, starting in Q3 and then into Q4. So we're really just keen on making sure they see it ramp up to that over 400,000 ounce annual run rate as soon as possible. That'll be the best upside that we can see for the project in the near term. And then we'll start thinking about what this project looks like for generations to come.
And let's talk about the gold, and probably the most impressively performing gold producing mine in the sector in the last decade or something like this. They started off at what about 250 or 300. Now they're talking about over 500,000 ounces potentially next year. So 10% expansion in throughput, 3% increase in already high recoveries. Speak about Fruta del Norte, please.
Yeah, really, Fruta del Norte is one of those remarkable ore bodies. In Lundin Gold, I can't tell you how amazing of a job they've done in terms of being able to handle effectively every part of that, from the social community items to the technical side to building a challenging mine to working with the Ecuadorian government to make this thing a real success. Now they're really kind of seeing their fruits of their labor really come out as they're able to expand this ore body. The big part, this right from the beginning, the reserves had really been established at that 5 million level in that main part of the ore body right away. It had a huge inferred part of the ore body. That's what they really expanded and did focus their work on in the last 2 years. And it's paid off enormously by seeing that huge reserve increase. Still potentially more to come just from those original inferred resources in the southern end of the deposit. In addition to that inferred resource that has been around for quite some time being converted to a reserve, they're having tremendous amount of success really outside of this graben and finding new parts of additional ore bodies. So they continue to have tremendous success in terms of confirmation drilling and really resource conversion. And also on the exploration side, which is finding more of this material. I'm really not surprised that this expansion has come along. It's not taking a huge amount of capital to them to tweak the mill to increase the throughput and their recoveries. Getting that great luck on the recoveries helps as well too. So it's not a huge capital input for them to get a significant expansion into it, and they continue to find new parts of the ore body, new potential ore bodies. So again, it's great to have projects like this. To me, these are the projects that are those huge value drivers for our shareholders, is finding projects that are starting from, call it 350,000 ounces per year, expanding to 500,000 ounces per year, and then doubling their mine lives. You can't get any better value than that from a royalty.
Yeah, and just to kind of highlight people, just 6 months ago when we spoke with Ian, this wasn't necessarily expected that you would get to this place so quickly. And Lundin guidance, they usually hit guidance. So if they're talking about going over 500k, they're probably going to do it. And remember, Sandstorm has a royalty across the entire property, almost where they're exploring regionally as well. And at this point, Lundin has a lean balance sheet, and I would have a hard time seeing that they would acquire something rather than trying to find a new deposit and build another one close to Fruta del Norte. So, well, it might have been one of your better investments for sure. I mean, in 5 years
Yeah,
from
for
now.
sure. I think you kind of hit it there. Lundin Gold. When you think about expansion and buying new assets, pretty tough to find one that matches up to the quality economics of this project. So, does it make sense to really make that reinvestment back into the project, especially since the proliferation of mineralization is so extensive there? It's really something that we really look forward to. And again, that management team is such a great job. Ron Hochstein and his group, boy, they really know how to run these. And like the Ivanhoe team, they are really those company that you can rely on is always going to hit its targets. It's never going to overestimate, and they're always going to really kind of prepare the market. Under promise and then over deliver. That's really the calling card of both Lundin group of companies and also the Ivanhoe group of companies.
So we're getting a bit conscious of our time here, but let's talk about Blyvoor. Let's try to keep it a bit more brief. So Blyvoor is kind of a private company. It's been a fairly significant contributor, and it has an exciting roadmap. And now they're going public. Can you speak about the implications for the kind of acceleration of growth you can assume that people have some knowledge about this. We spoke about it last time quite extensively.
Yeah, listen, we've been to Blyvoor a number of times. A big resource, really big resource reserve, touched to those really kind of two main ore bodies that they're focusing on. Very, very good team. It's really kind of accumulation of some of those best South African mining groups that are there. Um, the real limiting factor, I think, for their ability to ramp up has been access to capital for this company. So, with this idea of going public, getting some additional funding in there, that's going to go a long way to be able for them to really kind of hit and start new phases up. For South African reef mining like this on the Wits Basin, such a key and important part is just getting more phases up and going. Um, so the more capital you have, the better you can replicate those successful mining teams over and over again. So that's what this should hopefully do. Is upon successful raise of some capital, allows them to open up more phases, and then use what's I think a really good effective mill, and be able to expand it. They're really in this mode of have been in this mode of trying to bootstrap themselves up, which has been challenging. But in this much higher price and gold price environment, with an injection of capital, their ability to really expand from where they're at right now should be much better than it has, certainly in the past. So we look forward to seeing this complete, to see these additional investments, to see more faces open up, and then see where we can go from there.
And then we saw, within the Lundin Group as well, Chapada obviously have a nice royalty there with Sauva, another resource aside from the main resource, a bit higher grade. So there's potential for either throughput expansion or replacement from this deposit. Either way, output expansion is on the horizon here. What do you think in terms of a timeline? Just give your sense of it.
Yeah, I think it's hard to say. I mean, the amazing thing about Chapada is that there's just endless mineralization that they're able to find. Like this is something that, man, if you ask me when I thought this project and this mine was going to stop operating, it's a long, long time, decades in the future. The Sauva is I think really interesting. It really kind of gives that biggest chance to more immediate type of expansions in it. However, I think the dependency, I mean, it's a real nice, efficient mill that they have right now that Lundy has put in place there. As we see the copper price increase, I think that's where the motivation for Lundin Mining is to really potentially duplicate the mill that they have. Of course, this is going to end up being a lot of different satellite deposits as well in a large area. So that ability to really kind of go and potentially just really duplicate that existing mill in another area, in another part of the property, that's certainly a possibility too. I think a lot of that is dictated by the overall margins they think they can really get from that and really the copper price. So there'll be, I think, a pretty direct correlation between increase in copper price at Chapada and likelihood of seeing significant expansion at the project.
Okay, that's a fair assessment. And then let's talk about Hugo North. Entre released more great drill results, wide intercepts of fantastic mineralization. What's the and some development updates? What do you think is the latest estimation of when you can start seeing cash flows from Oil Tolgoi?
Yeah, so Entree has really kind of entered in this, trying to work out an agreement that needs to get approved by the government. They've also entered into really kind of this process to really solidify the JV that sits there as well too. Um, Either one of those outcomes is great, I think, in terms of what they're looking at. We are hoping to see. At right now as we speak, they're processing and they're mining development ore on that joint venture ground. Um, so as they really kind of go through that development ore, they're kind of using this formula where there's a payback of some of that capital that comes into it. We can expect more larger scale And of course, this is dependent as well too on that copper price and the gold price as well. The higher the gold and the copper price, the quicker it is to do that payback of that capital on this finance carry that they have at the project. Uh, is it going to be as early as 2028, 2029? Perhaps we might start seeing that. But it may, depending on really kind of how they look at this, it may start a little bit later than that, the large amounts. When it does start happening, though, boy, at today's commodity prices, we're looking at really well over $20 million per year in terms of cash flow to us through those two streams that we hold on that Hugo North extension area as well too. So it's that'll be one I think to pay attention to towards the end of this year, beginning of next year. Of course, this is Rio Tinto's most important copper project. They're spending a lot of time talking about it. They're trying to increase their exposure to copper projects worldwide, and the block cave at Hugo North is very, very relevant to them. And they do spend a lot of time talking about that. So this is the sort of thing as we go over the year, we'll get a little bit more certainty from Entree as to how the JV gets solidified up, but we'll also get big updates from Rio Tinto as to how Hugo North extension really is going to develop and get a grander idea as to how the timeline as you get to that.
Excellent. And a fledgling junior in comparison in Mongolia with Erden Resources, they have reached their construction decision, and that's just below 1,000 ounces or something like this for Sandstorm Stream Ones on Bayan. Could you just give some color on Bayan Khundii and what you think about this company and their ability to execute?
Yeah, listen, I am so pleased to see this project go into production. It was less than 9 years that we made an investment into Erdene, based on really the first few drill holes that came out of Bayan Khundii. We could see even just from that there's something special was going on here, and over the years it's only gotten only better. This Erdene's combination with Mongolian Mining Group, that's really super sped this up. Almost all that infrastructure in place is there. They're really not that far away from starting to stockpile material and commission that mill. So it's slated for the beginning of 2025. And I couldn't be happier to see a project go from exploration stage into that production stage. That makes me really feel validated about this idea of investing in early stage projects, our favorite early stage exploration projects, of which this Bayan Khundii was. And even it certainly doesn't stop there for Bayan Khundii. With this partnership that they have, this idea of expanding into that dark horse area, but also even Altanar, which is further to the north. This is a really quality project. It now has the financial firepower behind it, with a Mongolian mining group behind them, and a good effective partnership. We can expand or expect Bayan Khundii to expand to quite a bit larger gold mining operation there, and then potentially some base metals into it as well too. All of that we have some kind of attachment to, which is great to see it. It really kind of go through the entire cycle from our first investment.
And just very quickly, what did you pay for that for this exposure originally?
Yeah, listen, it was really remarkable. Our first investment was effectively $1 million, but that bought us both equity and a royalty and a ROFR on royalties and streams. Barely over a year after we purchased that equity, we ended up selling it for over 8 times what we purchased it for. So we've already received well more than what we put into this investment just from the equity side. But you can attribute a value of that royalty of, call it $100,000 that we spent into that. And we'll be seeing cash flows of not huge cash flows, but certainly cash flows of course, dependent on the commodity prices and the gold price, but $500,000 plus per year starting really next year.
It's quite the thing. And then we saw Woodlawn as well. They released an updated, I think it was a feasibility study, right? And very positive. And now they've decided to, or announced they're intending to go for production restart here. So could you just give some color on who developed Globalis and what you think the likelihood of them being able to raise the capital and get this done is?
Yeah, so Woodlawn is operated. It went bankrupt originally, and it was we ended up getting that through the Nomad deal transaction as well too. Uh, and what's really remarkable about this project is they put a huge amount of investment into it. The subsequent party that took it out of bankruptcy was an actual mining contractor. So a group in Australia that does a lot of contract mining. So they know the space well, they know the operators, they know how to get this up and going. They've really jumped on this project with the idea of trying to get it into production, utilizing already built infrastructure in that area. So they've released these economic studies in the form of scoping studies that show some remarkable MPV numbers and remarkable leverage on the price of these. So they're looking to push this forward as quickly as possible. Being a contractor, they're actually looking for a partner to come in on a finance basis that will help speed this up. Um, but yeah, we have the ability to get a relatively quick payout. When we did this transaction with Nomad, we didn't anticipate that really Woodlawn was going to come back to life for years and years. But now we're seeing that potential of even sometime towards the end of next year, or 2026 or 2027. Any of those years, that would be a great idea to see some of that silver stream starting paying out on this really remarkable polymetallic deposit in Australia.
And then briefly as well with Horne 5, Ian mentioned that he really likes the project, but he was just concerned about timeline with the land issue. But that has been resolved now with Glencore, which is very good. So
Yeah,
what do you think is next steps and likelihood of getting towards construction or financing that project?
yeah. So a key part was really just this overriding land use transaction with Glencore. Glencore is a tough group to negotiate with, but Falco did an amazing job of really getting this sorted through. Another thing that's recently been completed is effectively this public consultation period, which is an important part of the permitting side. So that's just completed, I think, even just 2 days ago. So that will really kind of come into fruition to really understand how the rest of the permitting process goes. But with this OLIA agreement that they completed with Glencore, that's a key part in terms of being able to proceed to the next phase. So, of course, Falco has some really remarkable partners in things like Cisco Mining and Glencore on the concentrate side. Even the Quebec government are investors in the company and in the project. So it's a matter of really kind of taking this old past producing polymetallic mine um, and trying to get it up and going. Of course, this Horne 5 was really well known. It's a real, I mean, it's been operating. It operated over 100 years ago for almost 100 years continuously as well too. So not only is it a good prospect, but it's really part of the cultural fabric of that part of Quebec. So they're doing a great job in terms of really leverage this and get it moving forward. So we can certainly expect to understand a little bit better on the timeline up to getting this project up and going. So over the rest of the year, we'll hear more and more about the permitting stages, and then hopefully see some more revelations on how the financing and more capital gets put into the project.
And I know, David, you wanted to mention Robertson Troilus and maybe another one. Yes, so some bonus points for investors. Just go ahead.
Yeah, listen, with this commodity price environment, we're seeing more capital come into it. We're seeing more and more projects really get pushed forward. Projects like Troilus in Northern Ontario, this project is getting upwards of 2.4 million ounces and above. They're looking potentially at a scale of operation that is getting close towards where Greenstone's at. So it's great to see that project get pushed forward. Lobo Marte in the hands of Kinross. This is the second phase. As we see the gold price go up, projects like Lobo Marte get more and more relevant for Kinross, and they look at making sure that they're going to hit a timeline for production. Robertson, of course, part of that legendary and probably the most important gold district in the world in Cortez. Barrick and the Nevada Gold Mines Group continues to push that forward. Then we have even projects like Omai, which is getting life back into it. It's one of my favorite projects in the portfolio in terms of that expansion and finding new resources on a high grade project. Projects like Pony Creek shifted into hands of Orla Mining. Orla Mining, one of the biggest most successful mid-cap gold companies that's grown in the last couple of years. This is going to be a big focus, that whole area where Pony Creek is. And then down in Australia, projects like this Minyari Dome project, they continue to get amazing drill holes put into them. That project alone had over a 15,000 meter drill program completed already just in 2024. So when you take a look at that list of projects outside the current production and development pipeline, there's a huge amount of buried value in there right now, which we get really no value for. So it's important to refresh yourself every once in a while. Take a look down that list and really see what kind of production is potentially there in the future and what kind of investments are going into what Sandstorm has is just already bought and paid for portfolio of projects, just getting upgraded over time.
Excellent, and that is what we're going to speak about potentially in a decade from now. Like it's going to be the next big thing, right? So that's the beauty of your portfolio. David, excellent speaking with you. I think we're going to have to come back at some time and speak about updates, but also about just the early stage, reviewing the exploration portion of your review process has been very successful in the past, successful right now. So let's speak about that sometime.
Yeah, very good. I really appreciate it, Gorm. It was a pleasure meeting you and speaking with you, and I'm more than happy to come on again. Thank you.